Nepal's electricity exports hit a record high last year, bringing in 29.32 billion rupees from trade with India and Bangladesh. The grid moved 2.95 billion units of power across the border, a 67.96% increase. On average, the national grid maintained a daily output of 1,000 megawatts, utilizing nearly all of its 1,165 megawatts of approved export capacity. For a country that once struggled with chronic power shortages, these production levels signal a transition into a role as a regional energy provider. Based on top-line revenue alone, the current export strategy is delivering the highest returns in the history of the national grid. But during dry winter months, Nepal spent 10.55 billion rupees to buy electricity back. This creates an 18.76 billion rupee net surplus, exposing a paradox. We export record amounts of energy, while our domestic supply remains insufficient. While the export numbers climb, the domestic reality is different. Local grids face instability, and rural areas still deal with load shedding to prioritize the energy needs of the capital. The system is essentially functioning like an inefficient day trader, selling off its most valuable resource in the summer only to buy it back when prices hit their peak. This imbalance is a result of the country's energy infrastructure. 99.1% of Nepal's grid relies exclusively on hydropower. Most of these plants are run-of-river projects. Without reservoirs to store water, their power output is determined entirely by the live flow of the rivers. During the monsoon, heavy rains and glacial melt create a massive oversupply of power that the domestic market cannot absorb. In the winter, the process reverses. The flow of the rivers drops significantly, leaving the turbines with very little momentum. This seasonal volatility causes national power generation to drop by nearly 60% during the winter, precisely when heating demand is at its highest. Currently, only the Kulakani facilities provide any significant seasonal storage, which is nowhere near enough to buffer the winter shortfall. In the Himalayas, the lack of storage transforms vast power potential into a structural financial liability. Because the monsoon surplus cannot be saved for later, the grid is forced to dump that excess energy into the Indian market at whatever price it can get. That average export price sits at 8.96 rupees per unit. It is a low-value sale driven by necessity, not market strength. When winter hits and production stalls, the state must turn to the Indian Energy Exchange to meet the surge in domestic demand. During scarcity, import prices spike to 19.20 rupees per unit, more than double Nepal's selling rate. This creates a 2.6 times price gap, meaning the country spends far more keeping its lights on in January than it earns selling power in July. Furthermore, the 654 megawatt limit on cross-border transmission lines restricts how much power can be imported, often leaving the grid vulnerable during peak hours. Nepal is successfully increasing its trade volume, but it is losing the battle over the value of that energy. Breaking the cycle requires a massive structural shift toward reservoir-based storage infrastructure that can hold water across seasons. The $2.77 billion Budi Gandaki project is the centerpiece of this strategy. Using a reservoir to save winter water effectively replaces a 19.20 rupee import. It anchors a $10 billion pipeline intended to bring national capacity to 28,500 megawatts by 2091. This transition involves massive civil engineering projects, requiring years of construction to create the reservoirs needed for seasonal stability. Constructing these reservoirs provides a physical hedge against market volatility, allowing the state to control the value of its energy regardless of the season. The 18.76 billion rupee surplus creates a policy crossroads for the next decade of economic planning. One path is to continue expanding exports toward a 15,000 megawatt goal, positioning Nepal as a major energy supplier for the South Asian region. The alternative is to prioritize internal consumption, using that surplus power to subsidize domestic manufacturing and fuel local industrial growth. This would involve accelerating the adoption of electric vehicles and modernizing the national grid to absorb more power within Nepal's own borders. This is the fundamental choice facing the country, whether to sell its primary resource as a raw export or use it for domestic development. The real value of Nepal's hydropower may not be found in the revenue it generates abroad, but in the industrial revolution it can power at home.